Another volatile day for equities and markets abroad as the war in Ukraine continues. We have seen continued pressure on the ruble. We've seen upward surges in commodities. Let's get right to some of the unusual and notable options activity we saw today. SLV, this is the ETF that tracks silver. The May 25-30 call spread, we saw a buy of the May 25 calls, sell of the May 30s, 9,500 times. In fact, it traded many more times than that overall. In silver futures, it was actually the April 30 calls that were most active. Note that the commodity is trading around 25.55 or so an ounce. That's about $2 higher than the SLV ETF. Just important to keep the slight dollar differential between those two in mind. Gold also traded higher, almost $50 an ounce, even as the dollar strengthened. The Dixie closed at 97.371. Although the ruble eked out a small gain, it is still more than 35% lower versus the dollar than it was at its October peak. Other names seeing some unusual activity. Zoom, March 85 puts. We saw a buy of 1,305 of those. The buyer paid 46 cents. Zoom reported earnings yesterday and issued a really disappointing 2023 outlook. JP Morgan, Goldman, Stifel, RBC, Piper Sandler, Wells Fargo, Deutsche all lowered their price targets. Salesforce, CRM, short-dated call buying. No specific trade to highlight there necessarily, but we saw a lot of weekly upside call buyers ahead of earnings. The company raised their revenue forecast, cited Slack as a tailwind, and their Q4 EPS and revenue beat estimates. Looks like the stock is up about 4% after that announcement. IGT, the gaming stock, announced earnings today, disappointing the street and fell nearly 14%. One bear who owned the 28 strike puts is pressing that bearish bet by rolling down to the April 27-22 put spread. That traded about 5,000 times. They paid $1.70 for those 27s and sold the 22s at 35 cents, respectively. Defense stocks, again, well above average volume. We've been seeing that all week. We highlighted some of that yesterday on the options action segment on Fast Money. We also saw a big 1x2 put spread in Lockheed Martin yesterday, but that was most likely some form of a hedge. Most of the activity that we saw in Lockheed today was upside call buyers. April 450, 455, and 465 calls, among those seeing the most opening activity. American Express, a buyer paid $1.43 for 10,000 April 160, 150 put spreads. $3.35 they paid for the 160s, sold the 150s against it for $1.93. I know my CNBC colleague Pete Nigerian noted the activities in the 160s at least, and when he did, he highlighted the fact that AXP is trading at a premium to its own historical multiple. It's really been trading mostly in the teens, now trading about 20 times earnings. The stock has now given up roughly half the gains that it had seen all year just today. CrowdStrike reports next week, but interestingly, we saw well above average call volume for upside calls that are expiring this week. 3 times average daily call volume, and calls were outpacing puts by about 3-1. It was the 200, 205, 210, and 220 strike calls that were trading several thousand contracts apiece. Those were the ones that were most active. Cybersecurity stocks have popped since the invasion as cyber attacks appear to play a part in these conflicts now. CrowdStrike's still far closer to their 52-week lows than the highs of over 290. 22.5 times full year 2023 revs, not a cheap stock by any means, but they have room for margin upside. Antivirus replacements can drive growth, and large deployments can create a stickier relationship and improve their ARPUs. Fez, this is the Euro Stoxx ETF. We saw 12,000 May 30, 38, 45 put spread collars. Those were trading for about 60 cents. Prices were 40 cents, $1.55 and 55 cents respectively. Like I said, this is likely a hedge. The Euro Stoxx 50's largest constituent stocks are ASML, which is a Dutch semiconductor company, LVMH, the luxury goods company, Linde, Total, and SAP. Commodities, again, very busy. WEAT, the ETF, WEAT, that traded 5 times average daily call volume. March and April 10 calls were seeing the most activity. Much of this was actually rolling from the 9s activity we had previously highlighted, people taking some of those profits, pressing now to the out of the money 10 strike calls as wheat continues to rally. Dollar Tree announces earnings tomorrow. Options are implying a big move, about $12.50, either higher or lower by the end of the week. The largest trade with some profit taking on the June 135 calls. Virtually all of the open interest from the first half of January looks like it was unwound today. The seller unloading that lot at about $17.30 on average. ASO reports on March 30th. It's been performing very poorly since November. Looks like a trader taking another shot by rolling an upside call position down from the April 40s to the 35s on a ratio to benefit potentially from a smaller move to the upside, but they didn't want to commit additional capital. So they were buying fewer of that lower strike call than they were selling of the higher strike ones that they already owned. OTLY, the oat beverage maker, big June 7.5, 12.5, 1/2 call spread. That appears to be rolling the June 7.5s up. If so, that's simply adjusting a position only initiated and near the same level, I should point out, a couple of weeks ago. The company is going to be reporting earnings next week on the 9th. Options market implying big moves, but the stock has not performed well. It's down nearly 77% from the June highs. Analysts still like it, though. The average price target is nearly 92% higher than today's $6.70 per share or so closing price. Tronox, TROX, stock is down sharply. A bear is pressing their bet. They're rolling their March 21 puts down and out to the April 19 put 6,500 times. Prices were $2.20 and $1.60 respectively. The March puts were initiated back on February 8th. This was a huge win. The trader likely cleared well over $1.1 million in profits on those. The April puts will not capture earnings, which takes place 2 weeks after April expiration on the 28th. SPHB, the April 72, March 71 diagonal put spread trades 5,000 by 7,500 contracts. Prices were $3.29 and $1.36 respectively. Now, this is an ETF that tracks high beta stocks, and what's interesting is that the implied volatility term structure is downward sloping. There are 6 constituent names within this ETF that are going to be reporting earnings that are captured by the April expiration that this trader will now own, but are missed by the March expiration that they're going to be short. Those names are Broadcom, Carnival, Micron, PVH, Aptiv, and Adobe. FXC, the Euro currency ETF, bearish flows. The June 102 puts were the most active. 4,500 of those trade $1.45. It's interesting. We've continued to see upward movement in the dollar relative to other currencies, including the euro. We're getting closer and closer to parity between the two. MANU, Manchester United, trader rolls the March 16 puts out to the June 16 puts 5,000 times. Now, you'll notice that these are well in the money. This appears to have been a losing short bet, basically a synthetic equivalent of a buy right. Those are now deep in the money. The reason someone might adjust those is they don't want to be assigned on the short put side. Also, if you're in either a buy right, a covered right, or a put right, one of the things you want to try to avoid, and oftentimes you'll see this kind of activity, people are concerned when they suffer losses, when the stock declines somewhat precipitously, that if it suddenly rebounds, they won't get to participate. One of the reasons they're probably using an in-the-money strike here. This is not a trade, though, that I would initiate, collecting less than 1% essentially to sell that upside strike against long stock. If you believed Manchester United was going to bounce, buying the stock alone is probably a better bet. Amplified Transformational Data, ticker BLOK, that one saw 6 times its average daily call volume. May 30 calls, 3,700 of those trade for $5.36 against only about 101 in open interest. So these must be opening. An unusual in-the-money call purchase, likely an effort to get upside leverage with defined risk. PLL, Piedmont Lithium, that traded over 8 times its average daily volume today. A trader bought 1,470 October 65.80 call spreads. These are well out of the money, but a good amount of time to expiration. This is a stock that has been performing exceptionally weakly. It is a no revenue company. It's a mining exploration company. It's looking for battery metals. If it does get its mojo back, this would be a levered way to make an upside play to the, in case it gets that rebound. Quick point I just want to make. All of the companies that we were talking about today, though all traded more than 10 million notionally, are over $5 a share and traded more options actually in terms of their share count than the actual share volume. Meaning, if it traded 1 million shares, it traded more than 10,000 options, something like that. So basically, we're looking for situations where we see really unusual volume when we highlight it. If you like this kind of content, please hit the subscribe button and the notification bell. Give us a thumbs up. Be sure to share your comments. I will try to respond to them. Thanks for watching. If you liked the content, please consider subscribing to the Open Interest YouTube channel. That's youtube.com/open interest. And of course, you can also follow or tweet me at Michael_Co, or go to our website, www.openinterest.pro. Thanks for watching.